So, what if you could actually start day trading with just $100? I know, it sounds a little crazy, right? Well, stick around because today we're going to break down the exact steps to make it a reality, whether you're working with $100 in the US or 5,000 rupees in India.
Okay, let's just get right to it. The big question. Is this for real? Can you honestly take $100 and use it as your ticket into the wild, fast-paced world of day trading? It definitely sounds too good to be true, but, thanks to how modern brokerages work, doors have opened up that used to be slammed shut. But before we get into the how, we need a serious, and I mean serious reality check.
And this number? Well, this is it. The reality check. The stats don't lie. Something like 90% of all day traders lose money. I wanted to put this right up front because this is absolutely not a get-rich-quick scheme. It is a high-risk skill, and it demands knowledge, discipline, and a rock-solid plan just to survive. Honestly, understanding that risk is the real first step.
So here's our roadmap for today. We're going to start by really digging into that whole $100 trading question. Then we'll get you set up with your toolkit. After that, we'll cover the absolute must-know rules of the game. I'll even walk you through a simple first playbook, and finally, we'll talk about what it takes to actually stay in the game long-term.
All right, first things first. Let's make sure we're all on the same page and figure out why trading with such a small amount of money is even possible these days.
So what exactly is day trading? Well, at its core, it's all about speed. You're in a trade and you're out of that trade all within the same day. Sometimes it's a matter of hours, sometimes just minutes. See, you're not trying to invest in a company's future here. You're just trying to grab a tiny profit from those quick little price wiggles that happen all day long.
Okay, let's get practical. You can't do any of this without the right tools. And your broker, that's the most important tool in the box. Choosing the right one is like laying the foundation for your entire trading journey.
It's actually amazing how easy this part has become. If you're in the US, brokers like Webull offer something called fractional shares. That means with your $100, you can buy a tiny sliver of a super expensive stock, like a Google or an Amazon. Over in India, platforms like Zerodha and Upstocks have made getting started incredibly cheap. But no matter where you are, you're looking for the same things. Zero or super low commissions, so fees don't just eat up your money. A good mobile app, and this is key, a paper trading or demo account so you can practice without risking a dime.
Now, setting up the account is pretty simple. You'll register, you'll prove you are who you say you are, the usual ID verification. Then you link your bank, deposit that starting capital. And listen, this last step is crucial. Take your time. Learn the platform inside and out before you even think about placing your first trade.
This right here, this is the mindset you need. That $100 is not just money, it's tuition. It's the cost of learning a brand new skill, and you have to be 100% okay with the idea of losing it all. I'm serious. Never, ever, ever trade with money you need for rent, for groceries, for anything important.
Okay, account set up. Now you need to learn the rules of the road. And this isn't about finding some magical strategy that never loses. This is about learning the fundamentals that will keep you from blowing up your account in your first week. This is about survival.
One of the first things you'll hear about are support and resistance levels. The easiest way to think about them is as floors and ceilings for the stock price. Support is a price floor where buyers usually show up and stop the price from falling further. Resistance is a ceiling where sellers tend to take control. Just learning to spot these can make a huge difference in timing when you get in and out of a trade.
All right, I need you to lean in for this next part. If you only remember one single thing from this entire explainer, please let it be this. This next concept is what separates the traders who make it from the 90% who don't. And there it is, risk management. This is the whole secret. You see, professional traders think way more about how much they can lose than how much they can win. And the golden rule, the one you need to tattoo on your brain, is this: never ever risk more than 1 to 2% of your account on any single trade. This isn't a suggestion, it's a law. So let's make that real. On a $100 account, that 1 to 2% rule means the absolute most you can afford to lose on one trade is $1 to $2. Yes, you heard me right, it's that small. but it's that discipline that saves you from one bad trade wiping you out and allows you to live to trade another day.
So how do you actually enforce that tiny $1 to $2 risk? You use a stop loss. Think of it as your automatic eject button. It's an order you place with your broker that says, hey, if the trade goes against me and hits this price, get me out immediately. It's your safety net, and you use it on every single trade, no exceptions. It takes the emotion right out of losing.
Okay, you've got the tools, you've got the rules. Now you need a plan, a playbook. Look, as a beginner, you don't need 10 different complicated strategies. You just need one simple one that you can really master.
So let's talk about a classic, the pullback strategy. It's actually really intuitive. First, you find a stock that's clearly trending up. Step 2, you wait. You patiently wait for the price to dip down a little bit. That's the pullback. Third, as it starts to turn around and recover, that's when you buy. And finally, you sell as it continues on its original upward path, hopefully for a small profit. It's all about following the trend and being patient.
But, and this is a huge but, before you even dream of using real money on this or any strategy, you have got to practice. Use that paper trading account your broker gave you for at least a month. Seriously, get a feel for it, test it out, and prove to yourself that you can follow the plan without any real money on the line.
All right, we're at the final piece of the puzzle, and it's all about longevity. Look, anyone can get lucky and make one profitable trade. The real challenge is staying profitable over weeks, months, and years. This all comes down to mindset and discipline.
So here are some quick tips to help you stay grounded. Keep a journal of every single trade so you can learn from your mistakes. You have to learn to manage your emotions. Don't let fear or greed drive your decisions. Set a daily loss limit, say 5%, which is just $5 on your account. And if you hit it, you stop. You just walk away for the day. And please, for your own sake, stay away from those crazy volatile penny stocks.
And let's be crystal clear about realistic goals. You are not going to become a millionaire overnight with $100. A really good, consistent trader might aim for a 1 to 5% return per month. On your account, that's $1 to $5 a month. Yeah, it sounds tiny, I know, but it's not about the money at this stage. It's about proving the process works.
I can promise you this. You are going to have losing trades. You're probably going to lose money in your first few months. Don't think of this as a failure. You have to reframe it. Think of it as tuition. You are literally paying the market for an education in a very, very difficult skill. That mental shift is everything if you want to survive.
So there you have it. We've laid out the entire map for you. The tools, the non-negotiable rules, a simple strategy to start with. The path is there. So the only real question left is, now that you have this map, what's the very first skill you're going to go out and start practicing?